Right now, there is this massive army of anonymous internet users, and they're actually heavily outperforming traditional analysts at predicting the Federal Reserve's next move.
Yeah, and the crazy part is they aren't using complex economic models at all. They're just, using their own wallets.
Exactly. So, welcome to today's deep dive. Our mission for you listening is to explore how monetizing opinions is completely transforming how we forecast the future. We're looking at platforms where people buy and sell contracts based on future events.
Right. Anything from inflation rates to like the winner of the World Cup.
Right. Okay, let's unpack this because if we're shifting away from expert consensus, what makes a random, uncoordinated crowd so good at pricing reality?
Well, it really comes down to the math of how groups make errors. So back in 1906, there was this polymath, Francis Galton, and he watched nearly 800 people guess the weight of an ox at a country fair.
An ox.
Okay, yeah, an ox. And he assumed the crowd's guesses would just be, wildly off. But when he averaged all the independent guesses together, the final result was within 1% of the ox's actual weight.
Oh, wow, within 1%. So that's because, what, the crowd wasn't inherently smart on an individual level, but their individual errors just canceled each other out.
Exactly, yeah. The people guessing way too high completely balanced out the people guessing way too low. So you're left with just the pure signal.
That is such a weird mathematical quirk. But how did we get from a county fair trick to, modern finance?
Right, so skip ahead to 1988 with the Iowa electronic markets. Researchers wanted to test if a financial market structure could forecast election outcomes better than traditional opinion polls.
And they did that by forcing people to actually back their opinions with cash, right?
Yep, they had to put money on the line. And the results proved that when you introduce financial skin in the game, the noise drops and the signal really sharpens. So if we connect this to the bigger picture, that small-scale experiment has just exploded globally today.
And here's where it gets really interesting. Because instead of a few researchers, we now have millions of people crowdsourcing probabilities down to the decimal point.
Yeah, it's operating on a massive scale now.
So let's look at, say, a U.S. Federal Reserve interest rate cut. If a yes contract for a September rate cut is trading at 32 cents, that's not just the cost of entry. The market has literally priced the probability of that event at 32%.
Exactly. And as real-world data shifts, like let's say inflation suddenly eases, the crowd reacts instantly, that same contract might jump to 87 cents, which signals an 87% probability.
Right, and if the cut actually happens, the contract settles at $1, so you'd make a 68-cent profit per share.
But if it doesn't happen, you lose your 32 cents. So the current trading price effectively becomes this real-time forecast.
And the sheer scale of capital flowing into this shadow forecasting system is just staggering. I mean, trackers show early 2026 volumes hit $20 billion a month.
It's huge. And industry estimates are projecting a total market volume of $240 billion this year alone.
Wait, 240 billion?
Yeah, and the trajectory is super steep. By 2030, projections point to $1 trillion a year. Even just looking at the upcoming World Cup, we're seeing bets on prediction platforms nearing $2 billion.
Wow, I mean, $1 trillion sounds like the ultimate proof of crowd wisdom, right? But I want to push back on this a bit, because if the collective crowd is so incredibly smart, why is the majority of the crowd actually going broke?
Yeah, that is the catch.
Right, because trackers show that 58% of user wallets on a major prediction platform are currently in the red. Meanwhile, over $15.2 billion in profits were captured by just 740 accounts out of millions. So is it wisdom or just high-tech gambling?
Yeah, this raises an important question, right? Because that concentration happens due to a tiny fraction of really sharp operators. And they're basically extracting value from the uninformed bets of the broader public.
So the smart money is just feeding on the casual players.
Pretty much. And these platforms face mechanical limitations, too. Take low liquidity, for instance.
Meaning there isn't enough money in a specific market.
Right. If a specific event contract only has a few $1,000s trading on it, a single irrational trader making a huge bet can artificially spike the price. That distorts the probability entirely. You really need massive, continuous crowd participation to absorb that noise.
Plus, there are major regulatory walls limiting that global crowd size, right? Like, these markets are completely absent in places like India, where they're classified strictly under gambling regulations.
Exactly. But what's really fascinating here is how this mechanism is changing the broader information landscape. despite those hurdles.
Yeah, we're kind of moving toward this new model,
Y-
one that combines AI, which is unmatched at analyzing historical data, with these prediction markets that capture real-time human expectation.
It's gaining so much traction that Meta is reportedly developing a standalone platform called Arena.
Oh, right, the points-based one.
Yeah, it uses a points-based system instead of real money to try and harness that exact forecasting power without the regulatory headaches.
So what does this all mean for you listening? Basically, the next time you read a bold, dramatic headline, you might want to pause and check the actual market probability. Because the crowd's money usually tells a much more grounded story than the pundits' panic.
Yeah, it's a very ruthless, real-time metric for human expectation.
It really is. But that does leave you with one lingering question. If AI systems become the dominant participants making trades on these platforms, which those top 740 accounts suggest might already be happening, are we still actually capturing human intuition? Or are we just building a trillion-dollar echo chamber where algorithms trade with other algorithms?
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.